The stock market opens this morning higher than ever. The Dow Jones Industrial Average gained 122 points Thursday to end at 16,480. It is the 50th record high close for the year.
Wall Street is headed for its best performance since 1996. Michael Santoli is senior columnist for Yahoo Finance. Michael, good morning to you and Happy New Year.
You as well.
Up 25% for the year, the Dow is. What is going on?
Well, an outbreak of decent news all year, really, for the economy. So the market's a little bit ahead of the actual economy in terms of building in this economic improvement. But really, a lot of these fears of the aftershocks of the financial crisis didn't come true this year. You know, the federal government couldn't stand in the way of a recovering economy. And also, you can't overlook the fact that money is cheap, interest rates are low. The Federal Reserve's been trying to stoke a recovery, and it really seemed to take hold as the year went on.
When you look at those numbers, they keep going up, up, up. It makes you wonder, can that continue in 2014?
Well, it can continue if, in fact, we're on that map from the late 90s that worked out. I don't necessarily think you can really plug that in and assume that. But I do think what you have to keep in mind is that the stock market tries to value corporate profits, which are at record highs. So corporate profits seem like they can go up a little bit more next year at least. So I do think it can continue. The problem is it's been a very steep run this last stretch, too. And even though people on Wall Street are very enthusiastic about the direction of the economy, it isn't necessarily the case that it's going to kind of meet all their expectations. What we don't know is, can this economy and stock market kind of absorb potentially higher interest rates, which might be on the way?
So many of these companies still hoarding so much cash right now. What are you watching out for in 2014? What are your concerns?
Well, corporate behavior is one of those things, which, you know, will they actually start investing for longer-term growth and not just hoard cash and buy back their own stock, which they've been doing? And that interest rate question, we really don't know. The Federal Reserve has said, look, they're going to slightly pull back on their asset buying, which is how they're trying to stimulate the economy. We just don't know if that's going to mean that interest rates really go up farther than the economy can handle. Let's say the housing market recovery may actually stall out if that's the case. So those are some of the concerns. And then overseas, we have high hopes that China and Europe are both going to contribute to growth. We have to see if that pans out.
Quickly, correction in 2014?
You would think so, but it doesn't necessarily have to be anything devastating. We're not yet at that point where it seems like, you know, everybody is all in and we can only go down.
Michael Santoli, thank you so much.
All right, thanks.